Sorry, okay, your mic is mute.
Hello, hello, hello. Okay, all right. Okay, yep, sorry. Okay, let me back to my page. All right, okay, good evening, everyone. Okay, um, this is Elkie here with you guys today on the topic left side traders versus right side traders. Okay, for any one of you guys tonight, thank you very much for joining our session today. And our session today will focus on this topic, talking about two major styles in the markets, uh, the left side trading and also the right side trading. Okay, so let's start our session for today. Okay, so before I start to drill in about what's about the left and right side trading, okay, just a little bit about us. Okay, we are from Berjaya Securities in IPAC Online. Okay, who has formerly known as Interpacific Securities, and we have been around since 1972. Okay, so we are a subsidiary of Berjaya Corporation, and me and my team, we are running retail dealing team in B Securities, and our main focus is help to optimize our clients' performance and help them to enhance their knowledge and get all this improve their performance in financial markets. Okay, so the informations, the content that I'm gonna share for you guys today is for illustration and also investor education purposes. I will put up quite a number of charts and counters with technical commentary. Okay, yeah. So it is not investment advice, but if you have any doubts, any interest in trading it, okay, you can always feel free to refer it, check it with your financial advisor, your broker, or if you're our clients, do feel free to check with us. All right, okay, yep. So first, what is this all about, left side and right side trading? Okay, actually it's very simple. It's actually very much related. You can link it with leading indicator and also lagging indicator. So what does it mean? Okay, so basically left side indicator, okay, you can see if we look at the chart, if we break the charts into half and use the lowest point as the divider, okay, left sides, okay, before the low happens, okay, the left side of the low is usually traded by the left side trader, okay, left side trader. Okay, so basically what left side trader they are trying to do is they try to act, they try to predict before the low happens. Okay, they will usually buy before the bottom. They will be calling, hey, here should be the bottom already, so I should start positioning right now, I should be buying right now. Or if they are having a position on hand or they are short sellers, they are seeing, they will be looking at, okay, this could be the top, and it is the time to start selling, build into the sell into this topish position patterns, and then act before the market trends actually happens. Okay, so basically what they have been doing is they will be forecasting the trend before the trend actually form. They will be the leading ones in the markets. Okay, meanwhile, on the other hand, the right side trader, they act, they are responsive towards the market, they are reacting towards the market after the trend form. Okay, so they won't be reacting until they see a clear sign of a trend forming. Okay, they see, oh, okay, so we have the price breakout already, we have the price forming a higher high already, so it is the time for the market tell us that the trend has changed into an uptrend, and it is time to buy on anticipation, thinking that the trend has formed and it will continue to trend higher. Okay, so they only react when the trend has it has already there. When the market told them that, okay, we instead of selling, instead of coming down, we right now have formed a bottom and we are starting to coming back up from the bottom. Okay, yeah, so it's time to form into an uptrend, and it's time for you to come in and trade with us. Okay, so they are responsive towards the market trend after it has formed. Okay, so for right side traders, they will, most of the time they are trend traders, and they will be focusing on buy high and sell higher. All right, okay, so that's distinguished between left side and also right side trader. Okay, so which one is better actually? Right now you can take a minute and ask yourself, okay, am I left side trader or am I right side? Okay, so it's actually very simple. You just look back and ask yourself, every time when you are buying a stocks, are you buying when it's dropping, or you are only buying after the share price started to go up and continue to go higher? Okay, yeah, so just by asking this question, you know whether you are a left side trader or a right side trader. And there are pros and cons for both. Okay, of course, everyone wants to buy low and sell high, which left side trader will has been aiming to do. Okay, nobody wants to buy high, right? Okay, but of course, if we look into the pros and cons for both sides, is when we are trying to call the low, okay, the winning rate is definitely low. It's definitely lower. Okay, the chances of us getting to buy at the lowest points usually is not that great. Okay, yeah, and of course, if we are doing on the left side, we are trying to call the low, many times the share price might continue to go lower, and we definitely need to have a deeper pocket compared to trend traders, compared to right side traders. Okay, we have to go in and buy as we are believing that it is forming the bottom. Okay, so our trading pattern is, instead of in chun chun, we will be like machine gun. Okay, here we believe that this is the low, then we shoot again, we buy a bit, then we buy a bit. Okay, so as it is forming the bottom, we are positioning we are putting in quite a number of positions, and we are calling that this is a potential low. Okay, yeah, so usually this type of approach will be employed by long-term investors, that they actually combined with their fundamental view of the stocks. Okay, the valuation they think is undervalued. They think that technically it also coming to a bottom. It is a good time to buy cheap, so they will be keep on buying at that area. Okay, yeah. So meanwhile, on the right side traders, they are more towards swing traders. They are scalpers. They are like snipers. They are seeing that, okay, this is the time whereby the market starts looking at these stocks. It's trending higher. The volume starts coming in. This is the time where I'm gonna ride on the trend and trade along with it as the whole market buying it up. Okay, yeah. So the capital required is actually lesser, because they will be get in and out quite actively. Okay, and also the risk is actually lower. Okay, with the confirmations. Okay, so these are the two major differences these are the differences of these two trading style. So which one actually suits you? Okay, you and again, you have to you can be doing left side trading. Okay, but inside your heart, you thinking, I want to be a trend trader, I want to do a short term trading, but unknowingly unknowingly you have been employing left side trading style. Meanwhile, you might be trading on fundamental, but you always have been waiting until people talk about it. So when the price break out, then only you act with it. Okay, so take a minute and ask yourself, what is the type of trading that you wish to do? Are you gonna be one that just focus on a few stocks? understanding the fundamentals, and then identify where is the so-called fair price, or even cheap valuation price, and then look for the timing to get in. Okay, and you'll be contrarian, whereby when everyone is selling, you'll be buying and waiting. Okay, but of course, like I said, you need to have a deep pockets to employ this kind of trading strategy, or you are those that looking for the trends, looking for a breakout, looking for momentum. As everyone around you trading into these stocks, you also riding the trend and also trading along with them. Okay, so you have to ask yourself which one is the trading style that you would like to employ, and from there we will be looking into the correct tools to help you to improve your winning probability and also the profitability. Okay, each trading style, let it be left side or right side, they have different technical tools that's suitable for them. Okay, so that's why usually for left side trading they will be using leading indicator. Okay, which actually help them to identify the turning point earlier, the leading the indicator leading the price actions, rather than laggard indicator that been used for right side trading. Okay, so here are some examples that left side trading and also the right side trading. So today we will be looking into one indicator for each side. Okay, and I will be sharing with you guys what are the some of the tips to get into a good trading approach to employ for both sides. Okay, yeah. So for lifestyle traders, okay, if today you are a lifestyle traders, okay, I believe that these are the few important questions that you will be always asking yourself. Okay, for lifestyle traders, like we said, they are always predicting, or on the way to predicting whether it is the bottom, it is the low right now. Okay, and is the trend the selling? Right now we talk about stocks, yeah. Okay, so right now we talk about stocks. We focus on the buy side. Okay, is currently the selling coming to the end? Is the end of the selling already? Or is it oversold already? Is it a good time to pick up the stocks calling a low right now? So I believe these are some of the questions that left side traders will be always asking. Okay, yeah. So to answer all these questions, a few technical tools that I would recommend is like if we want to understand whether it's overbought or oversold, definitely oscillators are something that we definitely would want to look into, like RSI, like stochastics. Okay, and also to identify whether the trend is coming near to the end or not. Okay, divergence. Okay, let it be MACD divergence, it can be stochastic divergence, price volume divergence. These are some of the this divergence is a great tool to identify whether the strength of the trends. Hence, from there you'll be able to capture and forecast the potential reversal of the trends. Okay, and at the end we can confirm it with the candlestick reversal, spotting the potential high or low. Okay, potential low. Let it be. It can be forming a hammer with with a bullish divergence. Hence, from there, that could be the low that we are able to identify. Okay, yeah. So these are some of the technical tools. If you are left side trading, if you are always trying to predict where is the low, these are some of the technical tools that you can definitely want to drill in and also focusing on. Okay, so today in this section I will be sharing with you guys a technical indicator called stochastic oscillator. Okay, yeah. So stochastics oscillator is developed by George Selene. Okay, so basically what stochastic oscillator it does is it doesn't focus on the closing of the price, okay, but it focus on the momentum, okay, how fast the price been changing. It's follow the speeds and also the momentum of the price, and it can tell whether the strength of the movements is it still there, okay. So for ones who try to employ left side trading, who try to call the low, I think stochastics indicate or stochastic oscillators is a great tool to use to identify whether it's coming near to the low and whether this is the good area for us to call as low and start doing some buy positioning. Okay, so for stochastics in the market, there are a few stochastics. Okay, you will be looking at slow stochastics, fast stochastics, full stochastics, all this. Okay, so basically I will be using the full fledged ones, and the default setting for stochastic is 14-3-3. Okay, 14 periods with the 3 smoothens and also another 3 smoothen the signal line. Okay, but if you are trading, if you're using stochastic for a short-term scalping, short-term trading, you can definitely adjust the period to be shorter and more reactive. Okay, so this 14-3-3, I would say that is more suitable for stocks trading that is slower and trying to trade on the swing basis. All right, okay, so later on I will be using 14-3-3, okay, for the sharing later, okay. And the way I'm going to use stochastics, I will be focusing on divergence and also oversold and overbought. Okay, so let's go through what is this overbought, oversold, and divergence for those who hasn't been getting in touch. Never tried this stochastic before. Basically, stochastic is very similar like RSI. Okay, it's oscillator whereby it range from 0 to 100. Okay, so basically this is oscillate. This is how stochastic oscillator it looks like. It has 2 lines. Okay, rather than RSI just 1. Okay, and it used 20 and 80 as the benchmark. Okay, whether it's overbought or oversold. Okay, and at the middle right over here, this line is the 50. Okay, 50 is a very important level for stochastic, whereby above 50 is actually telling you that the upside is stronger, and below 50 is telling you that the downside is stronger. It's quite a strong, quite an important indicator to as a divider of upside and downsides. Okay, so basically for overbought and oversold, what we are looking at is if the stochastic indicator does it trade below the 20. If it trade below the 20, it is oversold. It's telling us that it is oversold. Whereby if the stochastic is above 80, it is telling us that it is overbought. Okay, so for example, right over here, when the Tenaga TNB is sell down sharply, you can see very quick from overbought, it came all the way into oversold. Okay, given it came down with such a strong momentum. Okay, so you can see it, after it rebound, even though it has also continued trend lower, but you do not see that it gone into the oversold area. Okay, because the momentum is not as strong as the initial selling over here. Okay, meanwhile, if we are seeing very strong rebounds, okay, from the selling, we can see that it went into the oversold. So although the price is meeting, it's about the same, or even the price gone lower, we don't see that the stochastic is gone below this low. Okay, so like I said, stochastic is is a momentum indicator which telling us whether what's the strength of the price movements, and from that it would be a great tool for us to identify where is the potential low and potential turn point. Okay, yeah, so you can see after it identified overbought, we have this selling coming in. Okay, similarly right over here, after it has shoot up, rebounded strongly, market identified overbought, and as it return trade below 80, you can see the share price coming downwards. Okay, same thing right here. Okay, After it has identified overbought, we have another leg up, then only we start to see the selling down. Okay, so if the trend is strong, one thing to bear in mind is if the trend is strong, we can see that the oscillator, the stochastic, it can be maintained in the oversold area over some time. Okay, we can see right over here from 14 ringgit 80 cents, it traded all the way to 13 ringgit. Okay, as the selling continues, we can see that the stochastics continue to stay in oversold. Despite that, there were pretty much a few rebounds. Okay, but every rebound it doesn't sustain and continue trade lower. Okay, yeah. Then you might ask me, hey, LP, then how can this be reliable? Because if it oversold, it can still stay in the oversold area, and I don't know whether should I buy or not because it can continue to go lower. Right? Okay. So that's why we're gonna put in this another way of another key criteria of stochastic, which is divergence. Okay, which is divergence to help us to improve our reading of stochastics and also improve our winning probability. Okay, so basically divergence, what does it mean is, okay, the share price, if the share price continue to trade lower, okay, continue form to a lower low, okay, you can see right over here is still lower low and lower low. Okay, the share price continue to trade lower. But if we look into the stochastics right over here, you can see it still continue to trade lower. Okay, it continue to trade lower, but as it traded into a lower low in April, we are not seeing that happening in the stochastics. Okay, instead the stochastic actually form a higher low. Okay, this is telling us that the selling momentum, although the share price has traded lower, okay, but the selling momentum isn't. The selling momentum actually decreasing, and it is indicating a potential of a bottoming forming. Okay, yeah. So we can see that after the bullish divergence, we have the share price rebounded all the way up. Okay, and similarly, as the share price continue to trade higher, what we see is the stochastic has gone into overbought area. Okay, and started to form a lower high while the share price continue to trend higher. It gives us the early signal that the share price the momentum has been slowing down, and it might retrace. Okay, the share price might come down. Okay, so from here, it actually helped us to identify that this is a good overbought signal with bearish divergence, and as it trade below the 80, we know that it is confirmation of a sell, and then we definitely want to take out some profits right over here. Okay, similarly, as the share price continue to trade higher, forming another leg over here, breaking into near to 15 ringgit, what we are seeing here on the stochastic is the stochastics is trading into a lower high on the stochastics, and is trading downwards, okay, rather than going higher. Okay, so you can see there is divergence between the stochastics pattern and also the price patterns. Okay, so given that it comes in line with the stochastic trending downward from overbought area, okay, with the bearish divergence, is telling us that it's the chances of this is being a top is very high, and from there we might want to exit or even reduce our holding so that we can buy cheaper later. Okay, yeah. So combining divergence and together with the overbought and oversold signal, that can give us a good signal to act in the markets to call a high or a bottom. Okay, yeah. So examples right over here. Okay, so we can see that the first example is the Naga that I showcased just now. Okay, we can see that as the share price formed bearish divergence and traded below, trading off overbought area, we can see the selling. Okay, as the trading off the overbought signal, You can see that's the selling. Okay, then we have Gamuda. Okay, so we can see Gamuda, the share price has been trading lower. Okay, as it continued to trade lower, but if we look at the stochastic at this area in March, it started to form a higher low. Okay, so as it rebounded off the oversold area, we can see there's a small swing rebound. Okay, and it continued to trade lower. Okay, so when it breaks into a lower low, okay, so it's very important to look into the stochastics to see if the stochastics traded and trades below the previous low in the stochastics. Okay, so what we are seeing right over here is instead of trading lower, it actually formed a higher low. Okay, on stochastics, forming another bullish divergence for the rebound. Okay, for the rebound, and from there we are seeing the rebounds and upward trending in Gamuda. Okay, from 3 ringgit 60 cents all the way to 4 ringgit 60 cents. That's a 30% rebound. Okay, for Gamuda. Okay, and as it was as the buying slowed down at 4 ringgit 80 cents level, we can see that it formed a bearish divergence whereby although the share price continued try to trade higher, okay, but stochastic is forming a lower high and actually trading off the overbought area. Okay, coming down below 80. Okay, so we see the pullback. Okay, so instead of this is although we have a overbought coming off, and we along with the bearish divergence, it doesn't transform into a strong downtrend, but it is a retracement and continue trade higher. Okay, yeah, so this is something that could happen. Okay, something that could happen. So that's why as the stochastic continue to break higher above the low, forming impact into a higher high. Okay, along with the price. Okay, that actually telling us that this bearish divergence is no longer valid and it continue to trend higher. Okay, so this is what we mean that in a strong trend, the stochastics can continue to stay in the overbought area over a period of time. Okay, so we can see that continue to trade higher and stay in the overbought until 5 ringgit 80 cents. Okay, yeah, so this is a good example to say that the divergence is no longer valid and it's time to get in. Similarly, if you are seeing the bullish divergence form and the share price going to trade lower with the stochastic forming a lower low into oversold area, then that's telling us that the sell trend is very strong and we really want to cut the long positions. Okay, so later on I will have an example to show you guys. Okay, right over at the behind. Okay, yep. So let's continue to look into some other example. Okay, yeah. So like for CMB, we can see CMB after the SIP selling. Okay, although it's still continue forming a lower low, but we started to see bullish divergence forming. Okay, a higher low forming in the stochastic at the oversold area. Okay, the rebounds. Okay, it continued to trade lower, but we can see although the share price continued to drop, we can see that the stochastic forming a higher low. So these are the area whereby left side traders will come in and keep on buying. Okay, calling that this is the potential low, and they are positioning for this rebound over here. Okay, as it trade higher, traded into a rebound. Okay, and continue to form higher low, but the momentum is off, and that is the time whereby they will be exiting as much as possible. Okay, with the bearish divergence and coming off from the overbought area. Okay, so that's why for left side traders, they can be start buying here, but as it continue to trade lower, okay, with confirmation for the divergence, they will continue act aggressively as the share price continue to go lower, because at this point at 6 ringgit 80 cents, 7 ringgit, they have already deemed it to be cheap. Okay, as the price continue to trade another 10% lower, they will be for them it's cheaper. It's even is even cheaper to buy, and they will be adding aggressively. Okay, so the aggressiveness for left side trader will be higher, and also of course if the when they really call a stop loss, okay, whereby if it really unable to rebound and break lower, okay, definitely the damage will be much higher, okay, whereby it could be somewhere around below 6 ringgit already for this case. Okay, yeah. So similar, another example right over here is after the rebound, we can see that CMB trend lower, okay, but the momentum it wasn't that strong, and then we have the rebound from the over so area, okay, and trending upwards, okay, from there. Okay, so it's actually very clear cut, very simple to identify, whereby for the stocks that you would like to trade, you just open up and then looking into the stochastics to see whether the stochastics is forming a higher high or higher low, okay, and is it in line with the price movement right over there, okay, because it's not every day that we can call that this stock's gonna coming to the high or forming a high or forming a low. Okay, many times it could be trending, but as the trend coming to has prolonged and also has been going for some time, okay, that would be a good time whereby we really want to, for left side traders, that would be the time for them to start paying attention to see whether the selling does the selling coming near to the end, or for the stocks that they have been buying and holding, is it coming to the coming near forming a top, whereby they want to focus and adjust on their positioning accordingly. Okay, so we can see for DRB HighCom, okay, DRB HighCom has been recently very active trading from 70 cents, almost doubled near the 140 cents with the revival of the auto sectors, okay, and also their Proton Amas. Okay, we can see that previously when it was trading lower, although it formed a bullish divergence, okay, but as we see that the share price doesn't rebound but continue to trade lower, we can see that as it breaks into a lower low right over here, okay, that's almost about somewhere around here. That's about from 1 ringgit it dropped to 90 cents, 10% down, lower already. Okay, that would be the area that we want to call a stop loss for our bullish divergence buy over here. Okay, yeah, and as it continue to trade lower, okay, we can see that it continue to form a bullish divergence, and this round, okay, this round it doesn't break into a lower low for the stochastics, but from that it started to trend higher. Okay, so that was from 60 cents and all the way to 90 cents, a 50% up from the bottom. Okay, but of course, the whole period, the bottom forming, it actually takes 2 months to form, and the rally only come 2 months later. Okay, yeah. Similarly, as we are seeing that DRB HighCom has been trading into the overbought region right over here. Right now, we are starting to see bearish divergence, whereby the share price continue to trade higher, but the stochastic has already forming a lower high and trading off the overbought regions. Okay, although the share price continue to trend higher. Okay, so if the stochastic managed to re-break this high, forming back into a higher high, okay, it would be telling us that the uptrend in DRB HighCom is still very strong, and it would continue to stay in a strong uptrend. Okay, yeah. So last but not least, MN Holding. Okay, MN Holding has been trading higher, riding on the data center, the demand for the electricity cables trend, and we can see that although it has been keep on forming bearish divergence as the share price continue to trade higher. Okay, you can see bearish divergence, but the share price continue to trend higher. Okay, yeah. So when the stock is trading on a very strong uptrend or a very strong downtrend, this is the scenario that you will face. Okay, whereby you continue to see after you exit, it doesn't actually trend into a selling trend after you exit on the bearish divergence. Okay. But just slightly a little bit retracement, it actually went into the over sold regions and recover from there. Okay, so from here, you have to identify that, okay, as it break higher into a higher high, okay, right over here, then it is a trend continuation rather than a top. Okay, yeah. So that would be for the left side traders. Okay, using the overbought oversold signal combined with the divergence, giving us a method how to call a high or low. Okay, yeah. So you can see in the process, as the price still, if the ongoing trend still moving strongly, okay, we will face the issue under having multiple losses or negative positions before the actual reversal comes. So hence a strong emotional and also conviction is really required when you are acting on it. So for left side traders, if you are really committing into left side trading, I would say that you might really want to couple it with fundamental trading and focus on those good fundamental stocks to employ this strategy, so that when you are engaging it, when you are buying it as the share price is dropping, okay, you're trying to call a low, okay, the fundamental aspect of it and also the assets, the let it be the book asset value or the intrinsic value of the company, it gives you the convictions to continue to hold and buy into the stocks. Okay, yeah. So on the other, so okay, so you can see that this is the example to like I said just now, to call the stop loss. Okay, as it continue to trade lower into a lower low. Okay, the share price. This is where we want to put a stop loss on our bullish divergence. Okay, and really cut off the positions. Okay, yeah. So I remember this is somewhere around 2 ringgit for these stocks, and from there the share price actually went actually from 2 ringgit it went all the way to 60 cents. Okay, continue trend very strongly downwards. Okay, yeah. So if we are trying to call a low, still, although the fundamental is that if the selling momentum is strong, the bearish divergence is no longer valid, we really want to implement the stop loss, okay, no matter how deep is the pockets, and continue to look into the next bullish divergence signal. Okay, yeah. And also to improve the profitability and also timing, to engage left side trading, I would, like I said just now, the engagement style, it has to be like a machine guns. You are hitting with a smaller size and then putting into multiple entries, buying at a different multiple price level. Okay, rather than just hitting the position in one shot. All right, okay, so that would be for the left side trading. Okay, as for the right side ones, I believe many of us right over here, many of the audience right over here, you guys might be using right side trading because that would be the mainstream. Okay, mainstream of the trading style, whereby it's trade along with the trends. Okay, a trend trader. So when it comes to trend traders, the very important things to know is whether is there any trend or the market is going on non-trending. Okay, and then of course, whether the current trend, is it still strong, or am I trading into the last leg where the trend is ending? Okay, yeah. So some tools that I would recommend for right side traders is definitely, it has to be trend trading tools like moving average, like MACD, like you can use parabolic SAR, you can use Bollinger Bands, all this, and many of all this, it actually use moving average as the backbone. Okay, so for today, I will stick with the basic ones, with the most basic tools, but it's the most critical, essential trend trading tools, which is moving average. Okay, yeah. Basically, moving average, it is the average for the price over a specific period of time, and it's smoothed all this data to give us an indicator to tell where is the direction where the price is moving. Okay, yeah. So basically, if we are using a 20 days moving average, it is telling us that this is the average for the past 20 days closing. Okay, if the share price is currently trade above the 20 days moving average, then we know that for all these people that has been buying for the past 20 days, on average, they are in profits. They are holding profits. Their trades is profitable. Okay, the trend the trend is going up and is strong. Okay, yeah. So for the way to engage moving average, usually it will be using moving average as support and resistance. Some of them they would use the price crossing or even moving average line crossover. Okay, so today we will be focusing on two. Okay, one is using the price crossing to identify the trend. Okay, then the next one will be using the using moving average and support and resistance for trigger. Okay, so basically, this blue line right over here is 200 days moving average, and you can see that every time when Maybank, the share price coming near the 200 days moving average, okay, which is 200 days is about like a year average. Okay, average for the past 1 year. Okay, you can see that it touched and then it bounced off, it touched and then it bounced off. Okay, so as it touched the moving average and bounce off, it is telling us that the share price continue to stay on an uptrend. Okay, all right. Okay, until we are seeing the sharp selling below the moving average line, it is telling us that the share price, it could be changing the trend and starting to trend lower. Okay, so right now for Maybank wise, instead of looking at the uptrend, we will be saying that Maybank could be trending lower. Okay, whereby you can see the rebound, it's resisted at the 200 days moving average, and currently it is also struggling to stay above the 200 days moving average. Okay, yeah. So as the price staying below 200 days moving average, we are more bearish buyers until the share price managed to cross above the 200 days moving average and staying above. Okay. So we can see that the indication whether it's an uptrend or downtrend, we will be using the price crossing the moving average line. So whenever the price cross above the moving average lines, like I said just now, like Maybank, when it crossed below the moving average lines this year, it's telling us that the Maybank share might trend into a downtrend. Okay, so for CMB wise, we can see that as the price traded above the moving average, the share price could be continue to stay on. It is turning from downtrend or a non-trending into an uptrend. Okay, and then in March we can see the heavy selling, in March. Okay, early this year, it actually turned CMB share price from uptrend into a downtrend, and it was a very sharp selling from 7.80 cents all the way to 6.20 cents. And in August, we actually have the rebound in CMB, and currently it is working, trying to stay on an uptrend. Okay, we can see that the share price is holding along with the 200 days moving average and trying to rebound off from this area. Okay, so if it's as the share price continue to trade higher to 7.60 cents, 7.80 cents, we might see it develop into an uptrend and it could continue to trade even higher from there. Okay, so we will be using price crossing as to determine whether it's uptrend or downtrend, and if the price is cross above the moving average line, then we'll call it an uptrend, and we only want to look for buy signal. Okay, so how do we indicate the signal? Okay, so I will be using the same example just now, the Naga CMB, all this. Okay, the same 5 stocks that are used for the left side trading, so that we can really see the signal has been really different for left side and right side traders. Okay, so you can see right over here the share price has crossed below the moving average line. So this red line right over here is the moving average line, and to facilitate a shorter term trading, I'm using 20 days moving average, 20 days EMA. Okay, yeah, so we can see that as the share price trade below the 20 days moving average, we are only looking for the sell signal, and as it rebounds, finding the moving average as the resistance and forming a bearish reversal. Okay, this is where we'll be calling as a sell signal. Okay, and you can see immediately the selling momentum it take off and threatening near the previous low. Okay, so similarly, after the share price tried to rebound, we can see it rebounded and then holding above the 20 days moving average, continue to trade higher. Okay, but right over here it's a little bit choppy. Okay, the selling momentum is strong. That's why we don't see the sustainability of the uptrend. Okay, but as it continue to trade lower, reversal. Okay, you can see that the share price staying below the 20 days moving average, touch the 20 days moving average, and again immediately with the bearish reversal, it gave us the sell signal for a selling continuations. Okay, you can see the selling is almost immediate. It's almost immediate, and it gave us a move immediately. Okay, similarly on the example for Gamuda, okay, we can see Gamuda is above the 20 days moving average lines, threatening the 20 days moving average, but then it hold well and rebound breakouts. Okay, break higher. So that's why when we say right side trading is always buy high and sell higher, is as it break higher we buy, and then we aim for the trend to continue, the momentum to continue, and then we try to sell higher. Okay, so right over here is somewhere around like 4 ringgit 90 cents, and then it went to 5 ringgit for near to 5 ringgit 30 cents 40 cents area. Okay, so that's another around like 6 to 8% upside in 2 days. Okay, yeah, so we can see as the price if the price chop going up and down, so okay, going up and down, there is no signal. Okay, so for right side traders, then they won't be engaging. Okay, they won't be engaging. They will be saying, oh, okay, there's no clear signal, the trend is not clear. We really want to wait until the price is holding well along with the moving average line, and then the breakouts to buy. Okay, so as you buy, your stop loss, it will be the nearest low. Okay, you can see this is the swing low. Okay, this is where is your stop loss. Okay, yeah, and then as long it continue hug along with the moving average line, then it can continue to trade higher. Okay, so you can see just now when we are looking at the stochastics, okay, this is the area whereby we will be calling as a high. Okay, calling high, and we are seeing bearish divergence. But if we are looking into the right side trading, this is the area whereby they able to identify that this is the uptrend, and they continue to generate buy signal as the share price supported at the 20 days moving average and break higher. Okay, you can see supported, touch, break higher, buy, touch, rebound, break higher, buy. Okay, so until the share price, you can see it wasn't able to rebound. The pullback has been choppy, started to threaten below the 20 days moving average, and eventually it break below. And this is where we are seeing that the uptrend has temporarily is off. Okay, similarly CMB, like just now, the selling rebound to the 20 days moving average, resistance come down, that is the selling signal. Similarly selling signal, and until it traded above the 20 days moving average, able to hold. Okay, you can see even right over here, the every time the pullback is threatening, trying to trade below the 20 days moving average. So these are the signal which is telling us that the selling pressure is strong for if you are trading on the moving average, okay, until you're able to hold above the 20 days moving average and make the reversal or even the breakout. That is where we want to buy it, okay. Yeah, so we can see there's still a little bit upside, okay, but as we are seeing the pullback is very strong. It's keep on threatening down below the moving average line. You can see this rebound also short-lived, and eventually it also traded below the 20 days moving average line, okay. Yeah, so these are some of the minor details. If you're trading moving average, these are the details that you might want to look into, and also that could help you to enhance your profitability, okay. So you can see for those that are strong trend wise, you don't see it threatened beyond the moving average line. You can see it hold and then drop. So for DRB, you can see it rebounded, it hold. Every time it touched coming near to the moving average line, it bounced and then continue to trade higher, touch, bounce, okay. It's just sui, I would say. It doesn't even threaten the moving average lines, okay. So these are those uptrending signal that you would want to trade along with it, okay. So very simple, just the price cross above the moving average line as it pull back, hold along with the moving average line and bounce breakouts. If you are fast, then on reversal you'll be buying it. If you look for confirmation breakout, then you buy it using the previous low as the stop loss, okay. Yeah, so this approach is simple and easy to use, beginner friendly, okay. Yeah, so the last one, MN holding, you can see also right on the moving average breakouts, okay, right on the moving average breakouts, continue to trade higher. It threatened below, but eventually it also recovered back with the moving average line and breakouts, okay. Yeah, so when the price is going on an uptrend, this trend trading is these are the methods that can be looked into, and also for right side traders, this is some of the ways that you can use. But of course, when it comes to right side trading, one of the key thing is we need to be patient and wait until a clear trend is seen, okay. Wait until the price manage to cross above the moving average, hold above the moving average, and give us the trade signal, okay. So for right side trading, another thing is we for momentum traders, trend traders, we will presume that the trend will continue to go higher, the price will continue to go higher. Sky is the limit until the trend ends, okay, until we get the confirmation telling us that the trend ends, whereby for moving average wise is the price trade below the moving average line, telling us that okay, the uptrend has come to an end, okay. Then we stop buying. Otherwise, we will keep on buying high and then trying to sell higher, okay. Yeah, so the trick for it is as we are buying higher, because every time we are buying higher and selling higher, okay, you definitely want to have a very clear trading approach to convince you to engage and jump into it when the share price traded higher, okay. Yeah, otherwise you have a lot of emotions and also a lot of fear to buy into a higher price for the stocks, okay. Yeah, so for right side traders, if you are right side traders, you definitely want to put down your trading approach, or even practice it like a systematic trading, okay, step by steps, okay, how you will be engaging when you identify it's going on uptrends and when is the entry point. Like just now, moving average wise is very simple. The price cross above the moving average line, then that's the signal telling me it's going into an uptrend, and my entry is just it touched the moving average line, hold and bounce, and that would be my entry, okay. Yeah, so as long these two criteria match, it form, and then I will be acting on it, okay, and respect the trend and right along with the uptrends, okay. Yep. So so that will be concludes very much of our section today, the left side trading and also the right side trading, and how we will be engaging if we are left side traders, and some sample approach how to engage as a right side traders. Okay, but regardless if you're left side trading or you're right side trading, okay, it actually doesn't matter as long it suits you and it helps you to make money, okay, make profits. Okay, so like Deng Xiaoping says, it doesn't matter whether the cat is black or the cat is white, okay, as long it can catch mice, it's a good cat. Okay, same thing right over here. As long it can produce you the result, it can help you to be profitable, then that's the approach that you should be using and then employ it. Okay, yep, that will be mark the end of the section for today. Thank you very much, and if you have any questions, you can always inbox us or drop it right over here, and we will get back to you by our crew. All right, thank you very much for joining our section today, and this week is a very important week with multiple events, Trump and presidency meeting, and then we have FOMC meetings. Okay, likely to have rate cuts. So good luck everyone trading the markets, and have a good night. Thank you very much. Bye bye.